All right. Hello, everyone. My name is Lee Song. I lead Silicon Valley Bank's Asia practice. I'm so thrilled that you guys can join us today and welcome. Before I kick off the webinar, I want to tell you a quick story. 2 weeks ago, when I was working from home, I heard a door knock, and it's my next door neighbor, Mike. Mike is a very successful serial entrepreneur. After some small talk, Mike asked me, he said, Lee, I'm glad you're home. I have two questions. The first one is, how's the SVB doing? I've been using SVB for years. Only 2 years ago, when the bank run happened, I moved my business to JP Morgan. Man, I really missed SVB. You guys have the expert knowledge and service for startups. So to answer Mike's question, SVB is doing great. We're alive and well, especially after FDIC combined SVB with First Citizen Bank. FDIC gave us a $70 billion line of credit to support the company. And that made SVB one of the safest banks in the US. And our client noticed that as well. In the past 2 years, we have seen consistent client flowing back to SVB globally. So that's just very encouraging update to answer Mike's question. Mike's second question is that he said, hey, right now with the new environment, new normal, there's so many positive, encouraging trends in the venture world. At the same time, there's also an unstoppable surprises popping up every day. What do your smartest VC clients around the world think of all these? And that question is the main theme of today's webinar. Before I kick it off to Andy Tsao, and I wanted to remind you three things. Number one, this webinar is recorded, can be viewed later on. Number two, if you have any questions, put them in the Q&A box. Number three, my name is Lee Song. I lead SVB's Asia practice. If you or your client channel partners have anything related to Asia innovation, I am your contact. So Andy, here you go.
Thank you very much, Lee, and love the energy bringing it this morning. And like Lee, I'd like to welcome all of you to our webinar. We're very excited to talk about this report, which is the first of its kind, and it was just recently released. It's called our Global Private Market Trends Report. Again, I'm Andy Tsao. I'm a managing director at Silicon Valley Bank, and I lead our Global Gateway business. I'm a long-time SVBer. I've spent the last 20 years plus working on our international business. That took me to London, where I was the first international employee for the bank who was based there 6 years. And during that time, I was able to help launch our office in Israel and work closely with my colleagues in China and India during that time period. When I came back to the US, I was happy to launch our Global Gateway business. And what is that? Global Gateway today is the center of business development and relationship management internationally for SVB. We work with startups, scale-ups, VC firms, private equity firms, and key innovation hubs around the world. So what we're going to do over the next 25 minutes is to talk about key themes in the report. And then we're going to turn it over to a series of fireside chats with some of the leading VCs around the world that are literally joining us from around the world. So we're looking forward to a great morning. And with that, let me introduce you to Jake Ledbetter, my colleague. He's a senior researcher on our market insights team. Jake did the heavy lift around the data analytics around this report. He's our co-author. Jake, take it away.
Thanks, Andy, and thanks everybody for joining us this morning. I'm super excited to be able to share with you guys really our first global report that covers different trends from the innovation economies in hubs around the world. So with that, let's go ahead and kick it off. So the agenda today, we're going to start by talking a little bit about the big picture. What are just a few of the key themes that we're thinking about as we're looking ahead into 2025 and beyond? And then we're going to tee up some of our speakers by talking about a few of the sectors that are top of mind for us. So the big picture, what is going on in the innovation economy? On the first slide, we're going to take a look at some of these macro trends. So if we could advance one slide. Here we're looking at the foreign direct investment both to the US from a given region and from the US to a given region. And this really highlights a couple macro trends that we're thinking about that are having a direct impact on the private markets. So I'll just raise two of them here. The first is this idea of US and China decoupling. And of course, there are a variety of policy-driven reasons that this is happening. You can think of tech transfer constraints, investment constraints, and then, of course, tariff policy, which is becoming more difficult for cross-border investment. The other issue, too, is higher interest rates across most of the developed world at this point. Even though they've started to come down a little bit, we're still much higher than we were during that zero interest rate period. And this is really leading to kind of a risk-off attitude among not only the LPs who are thinking, maybe I'll invest in VCs in areas that I think are perhaps a little bit friendlier, but also for VCs who are thinking of where they should be sending their investment dollars. And the second one that I'll raise just briefly is the idea of friendshoring. And we'll talk about this a little bit throughout this report. But the idea that, in this risk-off mindset, a lot of the investment, instead of going to places like China, there's kind of a shift towards more Europe, UK, other developed Asian countries, and also Latin America. And then finally, when we're thinking about fundraising and how friendshoring is affecting that, we're seeing a lot of sovereign wealth funds and other LPs from the Middle East, especially the Gulf countries, starting to come into the US. So just kind of a way to set the stage a little bit about how investors are dealing with this less certain world with perhaps a more unclear trade policy outlook.
So, I think we called it, Heidi, if you don't mind going back to the last slide, please. In the report, we referred this to this period as the global reset. And I think, as Jake points out, really the last decade sort of centers around the US-China relationship. And so much capital had flowed from the US into the Chinese innovation economy. And recently, through government pressure, whether it's executive order, congressional action, there is now a lot of restrictions in terms of where that capital can go. So today, for example, US institutional investors cannot be investing in quote unquote sensitive technologies. Those include AI, quantum, anything defense related, obviously. And so that's really put a damper in terms of what's happening in the China innovation economy, and we'll get more to that later. But I wanted to point out on this slide there, you can see how all the sort of trade flows are going up and to the right, and the brighter line is how much a country is investing into the U.S., and the dark line is the U.S. into that country. And so you could see only two instances really where there crisscrosses, Canada being one. And so I think Prime Minister Trudeau might have a good argument that the USMCA has been pretty good for the U.S. And then over in the MENA, which on the bottom is the other market, and as Jake points out, MENA has really become a global leader in allocating capital. We've been active in the MENA region since about 2016, 2017. Certainly seen a lot of growth in the region. And whether it's Live Golf or Cristiano Ronaldo playing football there, or writing checks into major VC and PE funds, MENA region has become a leader in allocating capital to the innovation economy.
And so I think that's a great kind of setup for when we're thinking about, where is the capital really coming from? And we talk about this a little bit on the next slide, when we try to take kind of some of these macro topics and really think about how they're affecting private markets. So here we're looking at global VC fundraising on the left, and what's kind of clear initially, and not a surprise to many folks on this call, is that there is a pretty big come down after the peak days. But what's interesting is that it's not affecting every geography in the same way. Places like the US, Europe are kind of looking at having found a floor. after kind of the come down off the peak, right? And we're seeing those regions really around 2019 levels. Meanwhile, China, as you mentioned, is having quite a more difficult time. Of course, there are a variety of things that we mentioned on the previous slide that are really influencing this, whether it's geopolitical risks, liquidity, cross-border investment constraints, et cetera. And so what's happening is the US and other countries that are seen as less geopolitically risky are really starting to get a lot more of that capital. So on the right, we're looking at what percentage of US PE and VC funds, what percentage of their commitments are from foreign LPs. And so while there was a bit of a trend down during COVID, when there were a lot of trade restrictions, lots of uncertainty, today we're seeing kind of the opposite happen with a lot more foreign VC investment coming into US PE VC funds. And we dig into this a little bit more on the next slide as well, where we really start to look at kind of where are those top 10 LPs in each region investing. So just to explain the chart for a second, on the top, we have the location of the institutional investors, so the LP. And then on the vertical axis, we have the location of the PE VC fund, so the GP. So on the diagonal, we see that there's a lot of investment in domestic funds, right? So top left, about 78% of a top US LP private equity portfolio is going to be invested with American funds. And so you can see down the diagonal that there's a lot of focus on these domestic funds. But we start to see a few differences as we dig into some of these different regions. So we'll start with European and MENA LPs, which are investing in a much more geographically diverse area. There's a lot of that capital that's going to the US. So for example, in the light blue UK, we have about 37% of a UK LP's capital that's going to US funds. And this is really different than some places like China, India, and other developed Asian countries, which is places like Japan, Singapore, South Korea, et cetera. And there's really a focus on domestic investment, and much less of that capital for funds in those countries is coming from abroad, kind of part of this more risk-off attitude. And I know that, Andy, you've seen quite a bit in terms of the difficulty that Chinese funds are having with USD fundraising.
Yeah, 100%, Jake. Most of the Chinese innovation economy is being funded in local RMB today. You can see how it's incredible how small the slice of the pie that Chinese US dollar funds are getting in terms of overall allocation of capital. And SVB has been active in the China market really since 99, 2000. We began our first trips to China, and that culminated with operations, even a joint venture in China. Those operations did not come over with the acquisition with First Citizens Bank. Today, we serve our China and Asia-based clients from the US on a cross-border basis through Global Gateway. I'd say that our China VC clients are really kind of hunkered down today, and given the geopolitical tension and the difficulties in fundraising, there's a reason why some of the leading top-tier US firms have kind of spun off their China funds. It's just really complicated today. And so, many of the Chinese fund managers are still very long about the opportunities in the China market, but it's just being very judicious about where they're deploying today. There are still areas that are safe, like, for example, healthcare is an area that has no restrictions, and preserving that dry powder for when things hopefully cool off. Again, in the MENA market, if you're in Riyadh, if you're in Abu Dhabi, if you're in Dubai, you're likely to run into one of our top tier fund managers from around the world looking to fundraise. They are, the sovereign wealth funds, Mubadala, PIF, family offices. It's not an exaggeration to say that they're in most major funds as an LP. I'll just conclude by saying, Saudi, for example, has a stated policy of Vision 2030, where they're actively diversifying off of the energy economy into the knowledge economy. And they just announced a $100 billion AI fund. And these are ways that the region is really actively becoming a leader in allocating capital to the innovation economy.
No, it's really been interesting to see kind of the development and the shift of investment in that region over the past several years. And one other region that I want to talk about a little bit, if we go on to the next slide, kind of really speaks to this idea of liquidity. Obviously, liquidity has been a big issue in the VC space for the past few years, ever since we hit the peak in 2021 and 2022. There have been really high interest rates, macro uncertainty, that have really caused VCs to have to kind of rethink their exit strategies, whether that means focusing more on M&A, or we see a lot more activity in secondary markets for sure. Here we take a look just at the IPO market. And again, there you can see kind of the main trend of kind of down and to the right, which in most of the world. But one area that's really bucking this trend has been India. And on the right, we can see kind of why there's still so much interest in IPOs in the country. On the right, we plot the US Renaissance IPO Index, so tracking the performance of recently IPO'd companies, and that's in the dark blue, versus a similar index in India, which is in orange on the top. And we can see just a huge difference in the performance. Those that are recently IPO'd companies in India are really outperforming, and is driving kind of this virtuous cycle of more companies wanting to go public domestically in India. And it's kind of changing the game a little bit, where entrepreneurs who had formerly kind of looked to the US as the ultimate kind of exit opportunity to do an IPO in the US are starting to instead say, well, maybe actually India is the right place to ultimately get liquidity. And that, of course, has implications not only for how they develop their product and the markets that they serve, but I know you've seen a lot of kind of how they structure their companies as well.
Yeah, thanks, Jake. Yeah, Houston, we have a liquidity problem, right? I think
We do.
when you consider how much capital has been invested into the innovation economy over the pandemic period, not a whole lot, or not enough, certainly, has come back to the limited partners. And you can see through this slide that the IPO window has been pretty firmly closed, or maybe just a tiny crack open. And so let's hope that interest rates will continue to decline, and that we can get the engine turning again with some liquidity. And with the India market, the report that preceded this one last year, it was actually a state of the market India report. And the reason why we focused on India for 2 years was the incredible macro story that's happening there. And I think that growth, as the world's fastest growing large economy, is now kind of built into valuations, as Jake points out in this slide. So I would say, some 2 words of caution for our India VCs and founders as they look to now structure their companies to list on the India market. And this is kind of a sea change, because around the world, everyone aims towards the US market for a potential IPO if you get there. And so this is something new. And so what India companies are doing is, traditionally there had been a Delaware parent company that owned the Indian company, and they're either considering flipping that around, where the India company is now the parent, or another school of thought is that you'll use another jurisdiction like Cayman to be the top co, and then you can flip that when you get ready to list on the Indian market. And I would say, as far as the Cayman structure goes, it's relatively unproven, and the India tax authorities have been pretty strong about kind of getting their pound of flesh, if you will. So we'll see what happens there. And then for those Indian founders that often come to the US very quickly with their go-to-market, if you're looking to avail yourself to credit here in the US, if your IP is held offshore in India or in Cayman, for example, that might make it restrictive for you to take on venture debt or other tools here in the US. So something to consider.
Yeah, absolutely. So now that we have kind of a view of the market overall, we would love to dive into just a couple specific industries that we're looking into. So if we could advance 2 slides, we'll start with, of course, AI. Look, it's a panel on VC in 2025. We've got to talk about it. So obviously, you know, we've kind of talked a little bit about how fundraising and investment numbers and VC overall have declined, but they haven't declined as much when you think about the impact of AI, which today is about 1/3 of all capital, all VC capital that's being deployed globally. And it's really affecting kind of this entire cycle of the VC comeback. So on the right-hand side, we take a look at the global financial crisis recovery in terms of US VC activity, and that's the top light gray line, versus the dot-com recovery, which is the bottom light gray line. It's obviously much slower. And then we plot out AI VC in the which is the top line, the dark blue, and it's really kind of following that mobile trajectory, the GFC quicker recovery, while we have everything that's non-AI following the much slower dot-com recovery. So really kind of driving the recovery here. And we get into this a little bit on the next page as well. One of the things that I think was really interesting about working on this report was just kind of how quickly AI is going global and really geographically getting much more geographically dispersed. You know, one of the interesting stats that we came up on in our research is from GitHub. So in 2011, 60% of AI projects were in the US. Today, it's only 25%. And so where's this happening? Of course, we have, kind of to this theme that we mentioned earlier of the US-China decoupling. There's just a huge group of AI unicorns and investment in China. And interestingly, a lot of those companies are being funded only by local Chinese VCs, not getting kind of that international capital. The other kind of areas that are interesting to highlight here are, one, emerging markets, which tend to be much more focused on kind of the application layer. So kind of taking those core AI models and applying them, whether it's to fintech products, consumer products, things like that. And then also Europe, which is becoming an AI hub. We saw this earlier this month when France was hosting the AI Action Summit. And the tone from that summit was much different than we saw the past couple of years. We saw the president of France talking a lot about investment in AI in the country and kind of the need to make sure that the regulations were such that it really encouraged AI and investment. And Andy, I don't know if you have kind of some thoughts on where AI is going internationally as well.
Yeah, thanks, Jake. Certainly, half of the funding is going internationally for AI. Half of the global AI unicorns are also outside the U.S. So certainly, very global in its impact. And I think we haven't really talked about DeepSeek, which really, sort of rattled the AI world a few weeks ago and sort of challenged the notion that that AI has this sort of natural capital intensity. You look at OpenAI, Anthropic, and others, and how much money it took to create those, and the capital intensity needed to run those LLMs. Well, DeepSeek, which reportedly only created their model on $6.5 million, really challenges whether the U.S. really has a deep of a moat as we thought we did going into that moment. And I think it has some really interesting implications for how AI plays out around the world if, in fact, the amount of capital needed to really be a player at the foundational level is a lot lower. And that being said, NVIDIA had its earnings release yesterday, and the Blackwell chips are on track, and so they hit their numbers and doing really well. So it's a very interesting time, and certainly AI playing out now horizontally around the world.
Yeah, I think that's a great point. It's kind of going from this vertical to a horizontal in a way that we kind of saw with mobile. And On the next slide, we kind of talk about a few other implications of this kind of sea change in AI. And of course, that's cybersecurity. When we have more AI, more data being used in a world with frankly, a lot more geopolitical tension, there's this huge need for security. And we see this as really an area that's been a lot more resilient than some other industries in terms of VC investment, because it's not only a priority, of course, for private capital, but also for public capital, so government funding as well. And we see a lot of kind of the idea of friendshoring and onshoring that we mentioned at the beginning really taking shape here. Of course, if you're developing a cybersecurity platform and you're using cybersecurity technologies, you really want to be sure that you trust where it's coming from. And so, on the left here, we show kind of where a lot of that cyber VC investment's coming from. And you do see a lot in the US, and then similarly, kind of on the other side, a lot in China. One country that is really punching above its weight here is Israel. And so on the right, we take a look at cybersecurity unicorns. And so the green on the top are the Israeli companies, but it kind of masks, just kind of the reach of Israeli founders and tech. And so those that are circled in the white are those that either have a founding team, C-suite, or their main operations there. And it's really kind of one of the main hubs for innovation in this space that's becoming just increasingly important as AI continues to proliferate and become so ubiquitous.
Yeah, we of course had started our journey in Israel back in the early 2000s, not long after the Yozma program started that created so many VC firms, and they call Israel the startup nation, and certainly they live up to it with the incredible innovation. Certainly, I think when you look at Israel and the intersection of sort of defense and innovation, cyber certainly falls into that category. So kind of no surprise that they are global leaders. The other interesting aspect, of course, is that Israel go-to-market is to come to the U.S. very, very quickly. So companies like Wiz, who most think are an American company, have their roots firmly in Israel. And, they turned down an acquisition for a couple $2 billion last year from Google. And it's one of those companies we're keeping an eye on to see if they potentially go public this year. Today, we serve our clients in Israel from our U.S. platform, but it's a very exciting startup hub for sure.
And so I do want to cover, while we still have a couple minutes left in the presentation before we turn it over to the panelists, one other industry that we're really keeping an eye on, and that is fintech. So this is kind of a clear example of where emerging markets have a big population that's primed to uptake. And on the next slide, we talk about a couple, one more if you don't mind. We talk about a couple examples of this. So when we were first starting the research for this, we were talking to a Mexican VC who was kind of giving us the lay of the land in Latin America. And one of the things that stuck with me is she was mentioning how this kind of change in tech is different than some of the past tech paradigm shifts. She's like, today we have growing economies, growing populations, but the difference is right now everybody has access to a mobile phone that has reliable access to the internet. And so when there are these kind of innovations in consumer-focused, financial-focused technologies, there's really a group here that's really a population that's prime for uptake and being able to take advantage of this. So we did 2 mini case studies in our report. The first is on India's UPI, and the second is on Brazil's Pix. So these payment systems have really made access to financial services ubiquitous, eased money transfers, especially at low transaction values, because you don't have the kind of transaction fees. But the other thing that I think is even more important is they're really kind of setting the stage for innovation in fintech environment overall by kind of bringing these large populations into the formal banked economy. And you see some other countries starting to emulate these successes, whether it's by directly adopting Pix or UPI, or kind of using these as models to emulate themselves.
Yeah, it's really incredible how these nations have, innovated globally, and now through this payment platform have connected their population so much underbanked over many years. And so, I'll wrap up our section with a quick story on how UPI, as an example, has impacted India. India has been an historically, a very cash-oriented society. And, one of the trips over, it was during a period where Prime Minister Modi was pushing demonetization, very controversial because people in India literally had cash tucked under their mattresses, and were moving it into a more digital payments world. And my colleague Ella and I were in India last, coming back from a mixer that we had organized with founders and investors. And this little girl came up to us along the street and was trying to sell some knickknacks. And I said, "Oh, I'm sorry, I don't have any rupee." And she pulled out her phone and said, "Oh, UPI." And
No way.
it's just an example of how the Indian society is completely transformed to digital payments through UPI. And when you consider then sort of the India stack or the Brazil stack of what technologies are going to come next, and now that they have this digital platform, identity verification, very, very interesting.
No, that's a really interesting story, and just kind of shows how quickly the tech can be adopted across all kind of rungs of society. And I know that some of our panelists are going to be able to speak more to some of these industries. So hopefully we teed them up well to continue the conversation.
Okay, with that, we're going to turn it over to Sara, Rona, who leads UK and Europe for Silicon Valley Bank, and Mina.
Thanks, Andy. And thank you all for joining us today. So I'm excited to introduce you to Reza Malekzadeh, who's a general partner from Partech Ventures, who contributed some fantastic insights to our report and is joining us today from Paris to continue the conversation. So let's dive right into some questions. So hi, Reza.
Hi, Sarah.
Hi.
Thanks for having me.
Of course.
And Andy, by the way, if you have more money under your mattress, I can send you an address to mail it over.
We'll follow up afterwards with all that, with those details. So Reza, Europe has a strong talent pool and an improved early stage funding ecosystem for AI. However, scaling AI, or really just startups in general beyond that stage, is tricky. So one key issue that we see remains as a challenge is this growth funding gap. European funds just aren't well capitalized at this mid to late stage, which is forcing a lot of European, and in this instance, French AI companies to raise from US investors. We can call out Mistral, Poolside as an example. What do you see as the key gaps in this later stage funding and commercialization for European AI startups? And in your opinion, what needs to change in Europe's investment landscape altogether to ensure these companies can scale without having to rely on foreign capital?
Thanks, Sarah. So I think, actually, to some extent, going back to what Andy and Jake were talking about when they spoke about Israel, there's a number of things in the European landscape that are fairly similar in that at the end of the day, for a majority of these companies, the US go-to-market will be a fairly important one and probably the most important addressable market. And so very clearly, companies want to grow here, raise funding as much as they need, and then continue their expansion internationally and towards the US. And while it's true that despite the size of our market, our later stage funding is still limited compared to the US in particular, I think that's changing. There's been a lot of initiatives that have been going on across the various countries, but also the European fund itself to help the size of funds grow. I mean, if I just look at our own growth fund, we're fairly small by US standards for the first version of it, around 400 million euros. The second was 650, and we're targeting even more for the third version of it. And so there is continued growth there as the market is developing, as companies are being able to grow beyond their core markets, address broader markets, and therefore, hopefully have much larger valuations than if you were just, a German company focusing on Germany or just a French company focusing on France. Now, it's true that AI calls for much greater investments when it comes to the infrastructure. You quoted Mistral, but it's true because when you're doing these foundational models, the amount of hardware and software you need is very important. But going back to some comments that were made about the AI summit, there were a number of good investment messages that came out of it, showing that Europe is now attracting a lot of foreign capital to come and invest in the infrastructure that we have here, hopefully helping our companies grow much larger with local support.
Well, I think that's incredibly encouraging, and hopefully for the founders on this call. To kind of ting over, so the report highlights that AI investment is shifting from foundational models to application layer AI. In your view, which European sectors are really best positioned to lead in AI applications, and why do you think that?
I think Europeans have been, working very hard in developing amazing general purpose B2B enterprise applications. If you look at a number of strong companies that came out of Europe, I mean, one of the large recent IPOs was UiPath, which came out of Eastern Europe and was able to enter the US stock market. So that's definitely an area where we have the talent, we have the expertise. And by the way, problems that a larger European company might have are going to be very similar than their US counterparts. So it's easier for a European startup to develop technology, product, and solution for that. And so I think when it comes to this class of B2B enterprise apps, we're pretty well positioned because of the talent pool we have. And at the end of the day, code is international. So whether you're French, German, or Hungarian, you're going to write code in the same language. And you can address the same problems at a global level. So I think those are areas where we can shine faster and better because there's less hardcore infrastructure investment required. And it's much more at the application layer where, as you started by mentioning yourself, we have a pretty strong talent pool that we can draw on.
That's great. I'm gonna go back to the AI summit a little bit since you mentioned it. But so my last question is really, with AI regulation being a major debate globally, and given that, this summit was about 2 weeks ago, do you think that Europe is going to take on a similar role to GDPR in setting the global standard for AI governance? How realistic is that in a world where, we're seeing geopolitics shifting away from regulation? I'm asking because for context, I'd love to know what were some of these major takeaways from this summit, particularly as we think about, US and China, like we talked about earlier. Then we hear UAE is committing $50 billion to invest in data centers in France. How is Europe positioning itself in this regulatory landscape?
Yeah, I think, regulation is always a double-edged sword. So on the one side, you think, oh my God, I have to go read this huge thing. And on the other side, it does help when it's done the right way. And I think GDPR that you mentioned was an example where early on it was seen primarily as something negative. And then we started seeing even California or China starting to adopt consumer protection acts around data. Because at the end of the day, you can't just leave everything free flow without regulation, because otherwise individuals, consumers, smaller organizations will have a hard time in this. So I think you don't want too much of it, and it's a delicate balance. So one of the messages here that we heard at the summit coming out of Europe and France in particular was we want to have responsible regulation. So we want to strike the right balance. Are we there yet? I'm not sure, but do we want to go there? That's definitely what was messaged, and I think that the signal of the investments shows that we're going in the right direction, because ultimately, if people are deploying money here, it's not just because they find Macron super intelligent, which he is, but they're also hoping to be able to make good on their investment. So I think they're seeing fertile ground for that investment, and hopefully they're getting kind of the comfort that we're going to be doing smart regulation and responsible regulation to help things grow. But I agree with you, as an investor myself, I don't want the regulation to get too ahead of the technology itself.
Yeah, I love that. I'm excited to see sort of what's to come in these next couple of years. I feel like so many things are kind of just really changing. So with that, well, merci, Reza. Really appreciate you joining us today. I'm going to pass it over to my colleague, Nico, from our LatAm practice.
Thank you, Sara and Reza. And I'd like to welcome Eric from Monashees. Let me wait until we get some.
Hi, Nico. Yeah, I'm here.
Hi, bom dia, Eric. So I'm very excited to invite you over to our panel because, as a founder and GP of Monashees, a fund that has a lot of experience and success, first started in LatAm, then has evolved into investing in broader, and so first started in Brazil, then expanded to broader LatAm, and now is also investing both in the US and even in London. I want to take your perspective of what is the uniqueness and what are the special nuances and challenges, opportunities of investing in LatAm.
Well, thank you, Nico, and thank you very much for inviting me for this conversation and for this webinar. It's great to be here. We've been, have a great partnership with SVB for many years. As you mentioned, we've been doing this in Latin America, venture capital investments for some time now. We're actually celebrating 20 years this year. We started in 2005. So we've seen actually when things really started up 20 years ago. And now we're kind of halfway through a second cycle of VC. It's still early, still building the ecosystem, but it's happening, and it's happening in a big way, in terms of proven entrepreneurs and experienced entrepreneurs and more confident and ambitious entrepreneurs, and some really great flagship companies that were formed in the last, especially 10 to 15 years. As special opportunities or things about Latin America, I'd like to highlight, something that people don't really stop to think about. But if Latin America was a country, we're talking about 650 million people and a GDP of combined, aggregate GDP of $7.5 trillion. So it would be the third largest country in the world, after the US and after China. And of course, you may say, well, but this is an aggregate of a lot of different countries. But Latin America, compared to other, similar emerging markets or regions, it is more homogeneous, even though each country has its own characteristics. We've seen, especially in the last 10 years, that it is possible, as we also expanded, from an office in Brazil and an office in Mexico, and helping companies from the region expand pan-regionally. It is a reality today that you can expand pan-regionally, and there are similarities. And when you think about the region, you think about this larger region. So having the market, this is a very good aspect of it. There are many things to talk about, but I really think it's a population that has an incredible digital adoption. It's passionate about technology. So both B2C and B2B companies have some of them show explosive growth. As I mentioned, increasingly sophisticated companies, world-class tech companies, and even some entrepreneurs building global companies outside of LatAm. So we are very, very bullish about the future, and also some regulatory tailwinds that are very important, especially in fintech, that allowed the creation of a company like Nubank, which is a flagship kind of neobank in the world, also helped by this. The government and regulatory tailwinds that were, I'd say, a little bit surprising, how fast it happened to promote, competition and innovation.
No, I agree. And as a Colombian, I've been very lucky to see the expansion of Colombian companies to Mexico, Brazilian companies to Mexico, even to Colombia. And now we're also being able to see LatAm companies that are being successful growing into markets like the US, for instance, Gympass or now Wellhub. So I think there is a lot of tailwinds, so there's a lot of success. I think also the level of education, there's amazing entrepreneurs. There's a lot of nearshoring that happens because of the amazing tech talent in LatAm. So just a lot of entrepreneurs take advantage of that. But going deeper into this, you mentioned a little bit of the regulatory tailwinds. You mentioned the fintech opportunities. So I'd like to dig deeper and hear about your experience and your thoughts on the role that Pix has played in Brazil, seen as it's something that is now also being developed in Colombia and in Mexico, and what opportunities are going to come from that. And also, we have to talk about AI. So I'd love to hear what you're seeing in terms of AI in LatAm. Here at SVB, on a daily basis, we're banking more and more of AI-driven LatAm startups. So I want to hear from the investor side what you're seeing.
Sure. So on fintech, well, fintech is obviously the largest vertical because it's an enabling vertical. Everything just goes through it. Processing all the payments. So anywhere, fintech is a huge market, and it's not different in Latin America. And we're glad. I mean that the probably very important innovation and the emergence of great companies happen in fintech because it also helps the whole ecosystem. We have to remember that actually, at least for Brazil, this was not new. Innovation in financial services was not new. Brazil early on had to deal with hyperinflation in the 80s and 90s, created very sophisticated systems for electronic payments, real-time electronic payments. They were still costly at the time, but they existed. You wanted to do a wire transfer, it was immediate, since the 1990s. So there was this platform that was already there, and what the central bank and the government was just in a very smart way decided to move and probably also looking at the UPI case in India, but also developed the PIX solution, which is growing very, very well, and it's allowing for the digitalization of a lot of companies and people that were not banked. So it's really creating an opportunity for other layers of innovation in companies to happen. I know we don't have much time, so I can jump to AI. So even though I saw the slide that was shown here in the presentation, and I was trying to find an AI unicorn from Latin America, we're not there yet, but we're almost there. It's going to happen soon. AI, of course, it's a big disruption. It's a big revolution that's happening. We don't see any new company in the deal flow that is not really, dealing with AI. Portfolio companies dealing with AI. Very interesting things happening. We have some examples of very promising companies growing in our portfolio. So we have Traction, which is a company from Brazil that uses AI in a very sophisticated way to do kind of preventive maintenance of industrial equipment. Just moved the headquarters from Sao Paulo to Atlanta in the US because it has growing base of clients in the US and it's competing on an international global basis. Just closed a really great round, led by first-class investors. Very promising companies doing very sophisticated AI on a global basis from Brazil, from Latin America. We've invested recently in Music AI, which is one of the major companies doing AI for music and audio. It's a team of Brazilians. Part of the tech team is in Brazil, in a city called João Pessoa in the northeast of Brazil. And they are in Salt Lake City in the US also. 50 million users from 186 countries using their apps and platform. And finally, Slope, which is a fintech, AI for fintech company based in San Francisco, Brazilian co-founder, also started in Mexico and now very, using their own kind of developing their own models, to do fintech for credit analysis. So some examples that, Brazilian and Latin American entrepreneurs are really developing sophisticated AI, more on the application layer and mid layers, for the reasons, were discussed, in terms of the capital intensity of the infrastructure layer. But, things are happening, and we really believe that Latin America will be very well positioned in that revolution.
Eric, thank you for sharing these examples. The same, both me and SVB are very bullish on the LatAm market, especially when in terms of AI, in terms of fintech, and when there's problems to be solved, Latin Americans are always are there to create tech-driven solutions for them. So thank you for sharing this, and hope to continue talking. But now I'm going to give the space to Ella and Amit to tell us more about what's going on in their markets.
Thank you very much.
Thank you, Nico and Eric. Great insight, everybody. It's really a pleasure to to hear all of this market trends across the globe. Very, very interesting. So with me is Amit Karp, who is joining us from Israel, from Tel Aviv. Amit is a partner at Bessemer Venture Partners, which needs no introduction. We will talk a little bit, dive in a little bit more into the cybersecurity and the increasing role of Israel and Israeli companies that are taking in this specific space. So, Amit, let's just jump right in.
Sure, and thanks for inviting me.
Yeah, and thank you for the contribution, for the report. Really appreciate that. I think, we've heard Jake and Andy, and I think it's not a secret that we are operating in a new market landscape in terms of investments and venture capital markets. Fundraising across the broader market has been challenging, and I think founders today are finding it more difficult to raise capital. But that said, I think it's also not a secret that cybersecurity seems to be this little island of stability. Not only this vertical weather that headwinds of shrinking or cooling market landscape, but I think they keep attracting investor confidence, and just in 2024 raised $16 billion globally. So Amit, my question, I have two folds for the first question. I think maybe for the first part, I would love to know if you and Bessemer have shifted your sort of a strategy when you're investing in new companies these days. Are you prioritizing inequalities or metrics that you haven't done, or you compared to previous years? And the second question is really, why do you think that cybersecurity has been able to attract significant funding globally?
Yeah, sure. So let's start with the second question, and the answer is actually pretty simple. Like when there's downturns and things like that, you can always play with your go-to-market, with your sales, with whatever investment you have. But adversaries and attackers, like you have to continue securing yourself, and they don't rest. They don't care if there's a recession, no recession, global, whatever's happening. And when you look at the public market, the public cybersecurity market, and we had this list of the top 10 cloud cyber companies in 2016. At the time, Symantec, Checkpoint, like the total market cap was $60 billion. If you look at the list today, it has increased almost sevenfold. So it's almost $400 billion. So if you just had in them with Palo Alto, now $125 billion market cap. So if you just bought this, cyber ETF, public companies, in 2016, you have made like 7x. This is like almost like NVIDIA return. And if you project 10 years from now, do you think there's going to be less cyber or more cyber crimes? Very likely, as technology shifts, as cyber criminals and more digital, more attacks going online, we're going to see more cyber crimes, which kind of increases the need for these solutions. So that's why I think in general you see more investments, and VC realize it. And us as a large fund, we're now part of our 12 fund. It's a $3.8 billion fund. We have to have these mega successes. And frankly, historically like 10, 15 years ago, yes, we invested in cyber, but it was more difficult to build a standalone cyber business. And what we're seeing now, both in kind of these public companies and how big they are, when you can reach $100 billion market cap in cyber, but also in the private companies. Wiz, for example, grew for a few years to $20 billion valuation and then hundreds of millions of ARR. Our portfolio company, Axonius, which grew one of the fastest growing cybersecurity ever companies. So we're just seeing these companies growing very, very fast, which makes us be more bullish and spend more time and more resources there.
Yeah, and I think going back to your first point, in a way, the security is not a luxury at the moment, and I think when it's embedded in the actual business need, you kind of have to invest in it, because it's not a nice to have; it's a sort of must to have for enterprises and hospitals and you name it. So it makes perfect sense. So just maybe drilling down a little bit on the cybersecurity opportunity in terms of funding. I think Jake said it. Israel is definitely punching above its weight. When you look at the $16 billion invested last year, I think Israeli companies or Israeli-linked companies had made 40%, and depending how you look at it, you could also get to 50% of that total funding. So it's a small market. What makes it so unique to the point where they're increasingly getting the lion's share of funding compared to other markets that supposedly could have that?
Yeah, sure. So one thing and one myth I want to kind of change in people's mind is like Israel is more than just cybersecurity. We have companies that are in almost any space out there. Obviously, Monday and Wix and consumer and Fiverr and companies in developer space and fintech, Melio, and others and unicorns in the public companies, almost any space. But definitely cybersecurity has become kind of the hub. And when you kind of look at the numbers, when I look at the amount of funding rounds for seed cyber companies in Israel last year, and this was a year when there was a war in Israel, and there were no flights, and it was it was probably the most difficult year that the country ever had since its existence. And there were still 50 cybersecurity seed rounds. So almost like every week, a new cybersecurity seed company raise money when the average amount is like $1-2 million. Other companies on average raise more than $8 million. And when you look at the number of cyber unicorns in Israel, there are now 20 only in cyber. There's 20 cyber security unicorns in Israel alone, with an aggregate value of $60 billion, $61 billion. Actually, there was another one last week, Dream. So it's now 21 cyber and $62 billion. So just really way above Israel's kind of share in the market. And I think what's driving it, obviously, the kind of the regular answers around 8,200 and kind of the intelligence units that many of these cyber entrepreneurs come from. But that was also true 5-10 years ago. And when kind of look at when I joined Bessemer 12 years ago, there was cyber security in companies in Israel, but typically when you had like a category, you had like 4, you had like 7 new entrants in each one of these subcategories. 5, 6 were in the US and 1 was in Israel. And with these new categories we're seeing now, it's almost the reverse. Almost many of these new subcategories, when the 7 companies, 4, 5, or 6 would be in Israel, and it would be 1 and 2 in the US. So it's completely shifted. So 8,200 explains some of it, but I think it's much more. I think the quality of cyber entrepreneurs in Israel now has become really, really high. There's many serial entrepreneurs, many people who sold their companies. They're kind of launching new companies and are aiming higher. Almost all the US VCs and global VCs now operate in Israel, all the way from seed funding. It's not just us. We see Sequoia, we see Lightspeed, we see Index, we see seed cyber dedicated funds. It just become very, very systematized. And the entrepreneurs, they're all very close to each other. They all work with each other. The playbooks are more ready. Many of the CISOs come to Israel to look for innovation. So it kind of feeds itself, like that snowball effect. You kind of see it growing over more and more to a state when I see we're a global fund. We see what's going on in the US and Israel. Like if you're investing in the US cyber seed company today, you immediately ask yourself who are going to be the competitors in Israel, and you're worried about them. Historically, it was kind of exactly the opposite.
Yeah, makes a lot of sense. And maybe for the last question, like Nico, I think you can't not touch AI, but I'll just say I think Amit, you said it in the beginning with attackers are becoming more sophisticated. So when you look at AI and cybersecurity, it's a double-edged sword, right? So everyone needs to get better. So both the defense and attacks. So with that in mind, how do you see the AI landscape, or the cybersecurity landscape with AI development, and what are some of the exciting sectors or subsectors you're seeing that are able to integrate that AI capabilities into their platforms?
Yeah, sure. So AI obviously is a big thing in every category, and definitely in cyber. On the one hand, as you mentioned, the attackers, it's just much easier to build an attack today, deep fake, phishing emails, all these things that required historically, or just malware, building malware, things that required a lot of effort are now just very easy, and it's going to be very, very difficult to defend against. But on the other hand, you're seeing kind of many of the security teams that were already overwhelmed, leveraging AI to do many of the manual work. So we're invested, for example, in a company called Toro, which takes typically like there's a SOC, like a security operations center, and they get an alerts and need to decide what to do and whether to trigger and whether to ask Ella, do you know this person, like that email. Like many of these things can be completely automated away by AI. So they're building an AI autonomous SOC, and then like some of these questions that you'd have to, then you'll get pulled into a person, and even for them. So you're seeing kind of the security teams also leveraging AI, because otherwise you'll never be able to deal with kind of the growth and risks.
Yeah, well, incredible. We actually at perfect timing. So thank you, Amit, again for the contribution and for your insights. And I'll pass it to Heidi.
Thanks.
Thank you, Ella, and I want to extend a special thanks to Amit, Karp, Eric, Asher, and Reza for joining us today, and all of you in the audience for joining us as well. We will be sending the recording, of course, to you, and you can download the report on svb.com under Insights. Have a great day.